Hello everybody and welcome. My name is Pete Renzulli. Welcome to the daily recap here today on Monday afternoon, September 17th. Happy holiday to everybody who's watching it from home. Also, as an aside, looking forward to meeting everybody next month, October 6th and 7th at the Super Conference here in New York City. Getting to the charts today, what can we say? It was very, very light volume, and today's price action actually matched the volume today. We've had some consolidation days that blasted off into higher numbers that we haven't seen for years in a lot of stocks, and today we pretty much got status quo for what we've had. You could say it was the holiday, you can say it was just what we've been getting. I lean a little bit more towards it's what we've been getting lately. I'm not going to say it was because of the holiday. If we can cut to this chart here at the spider specifically, it's exactly what we've been getting. We've been getting a push up and then 3 or 4 days of sideways, and then a push up and then 3 or 4 days of sideways, on and on and on, and probably illustrated as best as you could possibly see it last week. Where we had another push up, and now it looks like we're just consolidating again. So I want to touch on a few stocks today, but then I want to get a little bit into how to set up a trade for during the day, especially if you have this type of whippy type action. One of the things that I'm very, very big on as not only as a trader and learning from my own experience, but teaching traders as a mentor during the day how to not lose money. When I was a newbie, a pup as a trader, and you get all excited, you can't wait to be involved in the market, and you come in and you say, I got to do something every day, I must do something, the market's here. And generally, if you cannot make the distinction between a good day to trade and a tough day to trade, you will tend to overtrade both activity level and share size on days that you don't recognize when it's tough. So it's very, very important for you to learn the skill of recognizing when it is a good day and trading more aggressively. Holding trades aggressively could be something as simple as holding longer, or it could be as detailed as more positions, more size, and holding longer. But you need to be able to recognize that. So when we get these types of conditions that we're in right now, you'll find some people who say there's always something to do, but a lot of traders are trading under a finite ball of capital, and you shouldn't be looking for something to do all the time. You should only be looking to get involved when your strategy is unfolding according to what's available in the market. So I think that it's very important to really make a distinction between if you had these kind of really good days and you made quote unquote what you were supposed to in these blast offs, and I'm going to go through a bunch of stocks now that have a really good 3 to 5 day moves over the last week or so. As Mark says quite often, and I think probably worded as best as he can, stocks sometimes just need to take a break. If they don't necessarily wear themselves out, but the buying or selling pressure has to saturate itself a little bit, take a break before and if it can take off again. But you as a trader have to learn to recognize, is a pause this time different? And the way you're going to ultimately end up seeing that is if during a consolidation or during a pause after a significant move happens on heavier volume. So again, if we can go back to the charts here, I'll take a quick look at the spiders. You can see here on the bottom, we had the nice push up. Last week we had pause on much lighter volume than the push-up, then we had the push-up again, and now the last couple of days where we haven't pushed higher again, we're doing it on decreased volume. So that's pretty good. So we're going to go through some stocks here to set up scenarios for the next couple of days. Apple, as of when I left my desk, it was about 30, 40 cents, just below 700. I'm not sure if it actually got above there post-market or if it printed there. But again, you can see that we are actually pushing through to new highs. But again, on a little bit lighter volume. You would like to see higher volume on new highs. We're not seeing that there. But no matter what, you can't fight the tape. So Apple's still pushing above. Looks like the 682 level is the significant level to keep an eye on. If we pull back tomorrow and look for a spot to bid, the area that we were looking for today was yesterday's low. We didn't push down quite that level. But Apple still, no matter what your opinion of Apple is, you have not seen any significant pushes to the downside. Hold a continuation pattern to the downside. We pulled back, paused for a couple of days, and then bounced again. So until that picture changes, you have to be looking long Apple. A couple of weeks ago, I did the morning call, and I said we were getting this whippy type price action, and more often than not, that is distribution where you end up getting a top. We did get a few days where we had bigger down days on heavier volume, but we haven't rolled over. So if you remember what I said that day, I said I'm not calling a top, but you do need to be able to recognize the conditions when it's not as clear of a long. And we just had roughly 4 weeks of that choppy type action. So now that we just printed above there, it's going to be interesting for everybody who's trading Apple on a daily basis to see if we stay above there. And clearly we're off the charts here. It's just a question of where we're going to go from there. All right. Next, we're going to be looking at IBM. Also a stock I spoke about a couple of weeks ago. I said I don't like it until it clears 200 and stays there. It's above 200 now. You see we have 3, 6, 9 days in a row where we closed above the open and pushed back. We did not get all the way back to 200, so I don't like getting long up in this area after this many days in a row, but I do really, really like the bid as long as it stays above 200. So if we get a nice clean bull flag on the daily charts here, I do like bidding Apple into that. Home builders took a little bit of a break today. Toll Brothers, Lennar, and we'll actually get into Home Depot a little bit here too. Not a home builder, but certainly affected by that. Really nice push up. Actually, Home Depot, a little tighter range, same as Apple though. Pushed up, paused, came back a little bit into the range, and now it's above again. So all of these stocks that are taking a pause relative to the last few moves, it's healthy. It's just normal price action. Think about if you're an institution yourself. You're not just going to hammer it and keep buying like crazy and keep pushing it up on yourself. You can take a break, try and get a little better price. A lot of stocks today setting up as inside days, which sets up a breakout in volatility. So one of the things we talk about a lot is contraction leads to volatility. Volatility will lead to contraction. So we saw some volatility, now we're leading to contraction. To look for some opportunities tomorrow that might not set up where it didn't pull back far enough for you, look for some stocks that had inside days today, which means all of today's price action is inside the previous days, and you could look for a breakout of that smaller trading range. And there are some stocks that had multi-days. If I'm not mistaken, MasterCard and Visa had 2 inside days in a row, so you can expect some decent volatility out of it. So everything that we do in the recap is setting up ideas for tomorrow. So Visa broke out, held 2 days of consolidation. I'm looking for Visa to give us a trend type day tomorrow. Rolling over to the financials, Goldman Sachs, same thing. Consolidated nicely for about a month, pushed up, really has not had a significant pullback. 105 to just over 120, that's about a $15 move. Even if you use a 50% retracement level, you're probably looking right around that 112 area, so it's got a decent amount to pull back. Now, does that mean you sell it short? Possibly, if you're more of a bear than a bull and you're finally looking for the stock to roll over. The better trade here, again, for your A trades would be to let it pull back a couple of days, wait for it to bottom out on your main time frame, then drop down to your shorter time frames. And I'd be looking right around that 112.50, 113 area there. Same thing, we just go right down the list. JP Morgan, Citigroup, JP Morgan, all doing basically the same thing. Again, very healthy. Now, as we talk about quite a bit, measuring what is relatively strong compared to relatively weak is extremely simple to do with just eyeballing a chart like that. Take a look at the 8-period exponential moving average on the chart. The longer a stock is closing above that level, the more relative strength it has. And that's a very quick way of eyeballing which stocks you should be looking for long or short the next day. You start to get price persistency, and we're seeing that in quite a bit of these stocks. One stock that I actually missed out on that I'm a little bit upset about is this CVX, Chevron. Pushed up nice, consolidated, and then it actually got above this 114 level and stayed there for 4 days and had a nice $4 push through. Now we're seeing some topping tails up there, however, still comfortably above. So we have CVX, COP, XOM, all basically doing the same thing, holding higher levels. All of these stocks you should still be continuing to look for longs. It's a question of, do I buy breakouts or do I bid when it pulls back? Now, a lot of the moves that we've had the last couple of months have been better opportunities bidding pullbacks, not so much buying new breakouts, even though the numbers have been higher. So you personally have to know your stocks, which means cull your list down a little bit to the ones that you trade best, which is a little bit advanced strategy for those of you that are doing this full time. Dig into your P&L and see which stocks you're actually earning money in. Sometimes you gravitate to stocks that we quote unquote like to trade, or a lot of other people are trading and they feel comfortable trading them, but you might not necessarily be making money in them. Dig into your P&L in the last 30 days, 60 days, 90 days, and pull it up on a net profit basis, not gross, net profit basis, and see which stocks you're actually making money in. See what characteristics those stocks have, and then trade more of those stocks. In other words, do more of what's working for you and stay away from what's not. Very often in my career, I've gone near stocks that were sexy, that had good volatility and that kind of stuff, but then you look at your P&L, you're like, what am I doing? I'm not even making any money in this stock. So make sure you're trading the stocks that you can read well and trade well. So all the stocks that we're calling out, they're to give you ideas, but ultimately you got to get in there and figure out which stocks are the ones that are right for you. On the short side, if we should happen to roll over, we do have a couple of tech stocks. Hewlett-Packard, HPQ, still in a slow grinding bear flag, didn't quite retrace the gap from the middle of August, and now we have what we call a pivot high just below the 50-period EMA there, as well as Intel, which has been relatively weak on top of that. So Intel actually did not bounce with the rest of the market there. So we got a pretty decent list there. The one stock I do want to mention that's on my radar right now, which is DuPont, DD. We actually were in a trading range for a while here. You could see roughly since May, and the last couple of days we finally got above this level, 51.50, and it seems like we're sticking around this. So from a risk-reward perspective, if you can get a bid someplace in the 51.50 area or as close to that as possible, looks like the next level is around 54. So the risk-reward there for either continuing to day trade in that direction or looking for a swing trade, the closer you can get to 51.50, it looks like a pretty good idea there. All right, one last thing I just want to point out, a couple stocks, CAT. Nice multi-day run as well, breaking out of a trading range, and DE. Both of those have been kind of comatose other than this little channel that we've been in for a while. I like CAT a little better than DE because CAT actually broke out of the range. DE's at the resistance level, so CAT has kind of proved itself above this level. So tomorrow I'll be looking to game plan CAT above the range that it's already out of, and I'll be waiting for DE to get above the 82, but not doing anything before that because you want to get it through that level first. Have a great night, everybody. Have a good holiday, everybody who's home today, and we'll see you tomorrow.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.